Hey guys, Alchemist here. So I hope you've all had an incredible week. Today in Sydney it is Christmas Eve, so I did just want to say Merry Christmas to all those celebrating and that I wish everyone has a happy and safe new year. And I'm feeling quite generous, and I feel I have been over the past few weeks. I have uploaded a full webinar as well as many other trade recaps, which I'll link above in this video here. And today I'm going to go through another trade recap with you all and show you that I had actually called this out on Discord as it was about to occur and how you could have got involved too. So starting off, we'll always have a blank weekly chart. Now, if you've seen any of the videos recently, you'll know exactly the weekly and supply demand levels that we're trading within. So this here is the weekly demand. And then the upper wick here is the weekly supply that we were looking at. And if we look at this piece of price action here and knowing that price is fractal in its nature, meaning what occurs on one time frame is the same sort of patterns and strategies we can use on higher or lower time frames, we can see here that we had a breaker structure on the weekly. And then if we have a look in terms of premium and discount, what we've done is we have had a pullback back up into premium, and potentially now we're seeing a reversal at this weekly supply to potentially be taking out this weekly low. So this low here should become a targeted low as it has failed in its objective of setting a new higher high. But this is, as day traders, this is something that's going to take quite some time to occur, but it's always important to have this higher time frame narrative in mind, just so that you can know what to expect in the coming weeks and months. So we'll get rid of that, as on the weekly, all we need is the weekly supply and the weekly demand level, and then we'll go down to the daily time frame. Now the daily breaker structure still remains the same. It was this one above here after we had a pullback greater than 110 pips, and then we closed above with a body. And the low was actually swept a couple of times, but we failed to actually close below. So this is still the daily low. It's just been swept. It hasn't had a new breaker structure. And the daily high is, of course, the highest point above here. So I am currently in replay mode, and I'm going back to last Thursday to show you that trade that I was just mentioning earlier. So this here is the daily high, daily low, and the daily breaker structure. Let's have a look at the 4 hour. Okay, perfect. Now on the 4 hour, we can see the daily low is still the daily low, but in terms of the 4 hour, because this at the time was also the 4 hour low, when we had a body close below here, this was actually a 4 hour boss. So we can mark this out here as our 4 hour boss. Okay, and then after we had a bullish pullback greater than 90 pips, so it was the next candle above. Okay, so here was over 100 pips. Then we had confirmed our 4 hour low. And then the highest point above the 4 hour boss line, which is the daily high, remains to be the 4 hour high. So this is our daily plus 4 hour high, meaning that our 4 hour range is from here to here. So looking at this, we can start to identify some POIs. So of course we can always take the extreme, right? It's good to have the whole extreme like this, and then we can have another zone here, just identifying the unmitigated portion. So the part that the next weeks have not yet touched. So this here remains to be unmitigated. If I just make it a little bit smaller, there we go. And then let's identify some more zones that would be of interest. We have these buy to sell wicks here. We have these buy to sell wicks here, which price had just tapped into. And these ones above here, they had interacted with this wick here, acting as a demand on a lower time frame. And then in terms of demands, we have, of course, the extreme. Again, we can take the whole portion of it and then have another zone here, which is just the unmitigated portion. So just this very lower portion here, which can probably be refined on the 15-minute or maybe even on the 1 minute. Zoom in a little bit more so I can drag it out. Okay. And yeah, it needs to be refined just to that unmitigated portion. Beautiful. Now up here as well, this is something that's very important. You guys should always have something like this just to keep in the back of your mind as to if we're bullish or bearish on different time frames. So the daily currently, we are still bullish as we haven't yet had that daily boss below we've just swept the daily low. Our 4 hour has now turned bearish, and we'll have a look at our 15-minute structure and our 15-minute order flow when we go down to the 15-minute time frame. Now we did also have this as a supply zone. Okay, more of a CPB because it is in discount of the leg. So we are expecting to give us a pullback from here, but for it not to exactly hold. And this zone is important as well because it had swept a lot of liquidity above here. And then we had this inside bar, which actually flipped this supply or flipped the catalyst for a pullback. And we also had this one here, which after interacting with this supply, we've pushed down, and then the supply has failed and demand has taken control. And what we could see as well is we had started building up quite a lot of trendline liquidity below here. So all this is liquidity to be swept, which has been generated potentially to fuel that bearish move down, to potentially be taking out that 4-hour low and continue the expectation of order flow to now set a new 4-hour range as we have now turned bearish on the 4-hour. So looking at all of this, I wasn't expecting price to be coming all the way up to these supply zones above. And I was looking at this zone here being very well priced because it's just at that EQ level. And it's also a place where a lot of momentum entered the market. So if we look at how long it took price to go down, okay, it was only 8 hours to take it from here to here, 2 4-hour candles. But for price to retrace, okay, it took it a very, very long time to come back to this zone, over 6 days. So we can see that the bearish momentum that entered here heavily outweighs the bullish momentum taking price back up to this zone. So when we have a corrective pullback like this and we have an impulsive move down, the idea is we'll have an impulsive move down, then we'll have a corrective pullback back up to the zone, and then another impulsive move down. We see this sort of model repeated over time and time again in the markets, and you can have a look at your charts and see it for yourself as well. So that's all we need to do on the 4-hour. Let's have a look at the 15-minute. Beautiful. So our 15-minute high at the time was this one here after we had a bearish pullback of 39 pips. And then we closed above. So that was our boss. Our 15-minute low was the lowest point below here. Okay. And our 15-minute high had not yet been set at this point, I believe. Yeah, so this here is a bearish pullback of only 14.8 pips. I am going to put up a link here for those of you that are new to the channel and have not seen my 15-minute structure mapping video. So for our strategy here at Millennial Wealth Group, we need to see a bearish pullback of at least 22 pips to confirm that 15-minute range. So we have not yet set our 15-minute high, and we've had our first tap into a 4-hour supply. Now, what do we know about this as well? So this is another something, a little bit of free source for you guys to go up and test for yourself, that whenever we have a first tap of a 15-minute POI, and especially when we don't have an extremely aggressive push away, it's usually to generate more liquidity for price to tap again, okay? Meaning, so this here we have buy side liquidity. So this here would be liquidity to be swept for price to then take this liquidity before then continuing downwards. So keep that in the back of your mind. We do want to see a second mitigation of a 4-hour POI on the 15-minute time frame. And in terms of demand zones within this leg, so we can start to have this range here, just keeping in the back of our mind that we have not yet set that 15-minute range, because this is not a confirmed high until we have a bearish pullback of 22 pips, as it could just be a pause in the market, and then we could see price continue to go higher. So within this leg here, what can we identify? Well, we have this as a supply. We have these buy to sell wicks here. We can take this POI because that didn't actually close above. The next one did. So this was the last flip zone. This was a 4-hour demand. We can refine it down. So we have this POI here, which is swept liquidity. We have this zone here as well, which is swept liquidity. Okay, and we have the extreme. Beautiful. Now, in terms of supply, the only one we currently have is this one. And what I'll do now is I'll quickly just jump over to the Discord. And actually this is 4:45. So in Australia, the Frankfurt Open is at 6 p.m. and then London Open is at 7. And the outlook was completed just between Frankfurt and London Open, just so that everyone was ready for the London Open. So let's push it forward a little bit and I'll show you exactly when I had done the outlook. So this is 5:45. So this here is Frankfurt Open. Okay, we'll put one more candle across and I'll go over to the Discord now. Okay, so having a look here on the Discord. So this was on the 22nd of December, so last Thursday. And this was the London Outlook done just over half an hour before the London Open. So again, here we have the same daily range that we were discussing before. as well as the same 4-hour outlook. So this is that supply range that we're currently tapped into. My idea was we're either going to have a second tap into it and take out the low, or if we were to close above, we could potentially be targeting a supply zone higher up in premium here before then returning to take out the 4-hour low. I have actually just made one mistake on the video in terms of identifying the 15-minute boss. I had this one here, which was just an internal one, as this was one very large push down. So I will be editing that on the charts as we jump across. But as we can see here, this is exactly that piece of price action that we're in at the moment. And I was expecting that second tap into the 4-hour range to then wait for 15-minute order flow to switch bearish, because at this point here, price had turned bullish when we had this change of character, which broke above this high. So I would want to wait for order flow to switch bearish to then take that short into this zone below, because this was that flip zone that we were identifying earlier. And this is the first one that was going to be in discount of this range, or it might actually still just be in the top of premium. We'll have a look now. But ideally what we wanted to see was we wanted to see a 15-minute change of order flow here, and then to take price short into this demand zone below. Okay, so let's now go back and have a look at the charts. All right, so we're back on the charts here. And so what we were looking for was the 15-minute order flow shift after taking the liquidity above this high and then closing below. But the first point of order here is to amend the 15-minute break of structure, which I incorrectly marked. So it was actually the break of structure after this point here, meaning that our 15-minute low was not here, and it was actually the same as our 4-hour low. So we'll move the 15-minute low mark all the way below here. And then let's have a look at the new range that we'd need to create here. So it is a very large 15-minute range at this point. It would be all the way from this low to this high. You can get rid of this one here. And yeah, as we can see, this zone is where we were waiting to see price to come back down to, and that's actually still in premium. However, as mentioned, we haven't yet set our 15-minute high, but we wouldn't be taking any trades until that was to occur. So this is 6:15. So Frankfurt Open had just occurred. Now, we're not interested until we actually have a 15-minute high created, which means we'd have to see a bearish pullback of at least 22 pips. But what we can see here is the top half of our chalk has started to now form. And what we're waiting on here is to see a bearish pullback of 22 pips. So this one here is still only 17.4. So 22 would occur just here. So we'll play one more candle across. Okay. And we can see now we have actually set our 15-minute high as we've had this bearish pullback of exactly 22 pips when this candle closed. Therefore, we now have our 15-minute range and we can start to look for trades. So when we have our 15-minute high, let's just adjust our range to being here. And once we've taken the liquidity above this high, well, the chalk that we'd need to see occur is a body close below here, which we've just now had. So this here is our chalk down. So now let's identify our 15-minute structure is still bullish, but our 15-minute order flow has now turned bearish. So when our order flow has turned bearish and was just set our 15-minute high, what are we expecting the price to now do? Well, we've pushed all the way up here. Okay. Then we've had a 15-minute change of character. We'd be expecting price to turn bearish to go down into a more well-priced zone, meaning a demand zone within discount, to then potentially see if we'd turn bullish and continue the 15-minute order flow objective, which was to remain bullish because our current structure is bullish, or whether the 4-hour would overrule, and given that we are bearish on the 4-hour, to then potentially take out the 4-hour low. So idea here is to take a short into discount. Simple as that. So once we've set this 15-minute chalk, let's now identify potential areas we could be interested in getting in. So I have this inside bar here acting as a demand. And we have this as our flip. Okay. We can even just take the lower portion of the wick and the upper portion of this wick here, because what that is symbolizing is that price, just get this tool, price has pushed down, pushed up, and we know that through the top half of this wick and then closed below. So that was the absorption of orders in this sense. This here is our refined supply. This is our 4-hour supply. I'm just going to minimize it just so the charts stay clean. And then of course we have our extreme up here. So let's go down to the 1 minute. When we go down to the 1 minute, we want to be taking a short from a 15-minute PY, meaning either this one here or this one here. Okay, so we've pushed down quite aggressively. All right, and we've pushed up. I'll just go back a few candles. Okay, so this was that range here. And what can we see? We have two nice zones in this sense. We have this one here, which is swept liquidity. and we have the extreme. And even here, we have this one as we had this candle trading lower and then the high being taken. So in this sense, when we have two zones like this, but we also have the extreme above, I'd be more interested to be taking from this one here, because if I was swept here and then also wasn't able to enter here, that would be 2 losses for the day. And I'd only have one more bullet, which is in the way I've set up my trade management, to potentially be entering from here or from the extreme. So given that we have these 2 zones, I was more interested in taking the higher zone, having a look at what 25% of that zone would look like, and then potentially, depending on how price returns to this zone, have a limit set here. If this were to be a loss, then we could have another limit on this higher flip here, which seems to be a quite nice zone, which has swept a lot of liquidity as well after interacting with this demand. So we could have a short set here with 2.5 pips. So again, what we like to do is have 0.3 pips above this high. So the high of this candle is 631. So it'd be 634, which is exactly there. 2.5 pips at 25% of the zone. Perfect. All right. And then in the lower portion as well, we could have this here. Right. This zone is quite small, so we could play it from the entry. Okay. Have it with a 2 pip stop loss, for example, or we could even just still, because this is quite small, we could take this whole bullish candle, which is the push up. So I'll just minimize, because I wasn't interested in taking this other one. Let me just get rid of this zone here, just so it's a bit more neat. And what we could see here is, because this actual POI is so small, right? It's just 1 pip. What we can do is, this is the whole pivot supply. So the push up, the buy to sell, which broke this 15-minute chalk down. And we could potentially be looking at entering just a bit lower, just so we can actually make sure that we stay in the trade, or get tapped into the trade rather. And again, 0.3 above this high, or just play it with 2.5 pips in this case. Sorry, it was from this one here. So we could enter just here, okay, and play it with a 2.5 pip stop loss. So these were the 2 entries, right? And as we are about to see, as price is returning to this zone, okay, we are creating some liquidity. And here we go, we are tapped in. So this one here, because my broker is a Razor account and I have very, very minimal spreads, this is still in. And then what we could see is, as we get to 4 hour, we could take 25% of our partial off here. Okay. And we still have this limit set if this was to be a loss. And then if we have a look at the 15-minute, as we can see, our zone, this could be the first sort of zone that makes sense. But again, this didn't have a heap of interaction. So this one here, okay, when we've interacted here, we've pushed down. We also had the chalk up here after taking the liquidity below this low. And then this was the chalk up. So I was looking to trade all the way down up until this one here, which is exactly what was posted on the Discord. So this would be, you could take 25% of it, or you could just set it just at the open, trying to get it to 17. Let's just push it up 1 tick, or down, sorry. There we go. So now on the 1 minute, let's have a look. We've created liquidity in this push down. So we've pushed away, we've created inducement above our zone, and then we've been now tapped in. And we can see we were risk-free pretty quickly. So this was risk off within 15 minutes. And then the remainder of our trade, we're holding to this low here. We're expecting to see a reaction from this demand, but not for it to completely hold and break price up to set a new 15-minute high. So let's just see what happens when we interact with this zone, and knowing that our overall target is at the zone below. We'll just go up to the 5-minute just so it's a bit smoother. Okay, so we've had a reaction when interacting with this POI and when it was swept. And there we go. We now see the lower target hit for 17R in the span of 3 hours and 50 minutes. So that would be 75%, as we did take a partial at 4R here. So I'll just quickly get out my calculator. 75% of 17 is 12.75 plus 1R, which is 25% at 4R. That gives us 13.75R in under 4 hours. Okay. And again, this was shared with all the members on the Discord. I do believe a few of the members actually were able to capitalize upon this trade, and it did continue to run into a zone into discount, and we're actually quite lower than that now. But again, this is just how simple the strategy works. And if you haven't yet seen my video that I posted last week, I have actually announced that as long as you completely complete my course and you've done all the assignments and been marked as satisfactory, if you show me that you have taken the trades as per the flowcharts and you are not funded within 12 months, I'm giving you all your money back. So that is a money back guarantee. Let me just write it down here for you. If you're not funded within 12 months, of using this strategy. Okay. And then what I also, oh, that's not how you spell guarantee. Where did that H come from? There we go. And what I also wanted to show you is, say for example, in this trade, you had already been funded with, say for example, a $100,000 FTMO account. And say we were using 0.5% risk per trade. 0.5% of 100,000 is $500. Okay. So on this particular trade here, if we capitalized 13.75R, that's $500 times 13.75, which is $6,875. And this would be US, right? Because the $100,000 account with FTMO is a US account. In Australia, it's $130,000. So this would be 6,875 USD. Now, FTMO keeps 20% of profits. So 80% of that, which is what you would keep, is $5,500. And what's the cost of my course? Okay, Millennium Wealth Group course currently costs 565 USD. That is just over 10% of what you can make in one trade. And I'm giving you a guarantee that you will be funded within 12 months if you are to follow the rules and if you are to follow the flowcharts. So this is literally, you have nothing to lose. This is it's going to be a difficult 12 months. I'm not going to say it's going to be easy, because if you are completely new to trading, there's a lot that you're going to have to pick up. If you have been trading SMC for a while, then it won't be that difficult at all. And that 12 months could actually be maybe 6 months, even 3 months, depending on how much work you're willing to put in. So what I'm asking for here is for you to put your trust in me. All right? This is less than 10% of what you can make in one trade in under 4 hours. And I just wanted to let everyone know as well that we're currently at 42 or 43 members. And after we do hit 50 members, prices will be increasing again. So if you are interested, if you're not currently funded and you want to be, or if you're not currently a full-time trader and you want to be, I can help you. And I can show you here, I've shown you over multiple cases, and I can also show you all the testimonials from the members in the group who have now completed the course as well. So if you are interested, make sure you please book in a free 15-minute consultation or get signed up straight away, just so that you can make sure you make it within the first 50 before prices do go up. And if you have any questions, let me know. Otherwise, I hope you have a great weekend, a very Merry Christmas, and a Happy New Year's. Thanks, guys.